Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Cardano's ADA, taking a look at what's been going on with the price action and what I think is likely to happen next. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be able to be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Okay, let's jump right down into this video. We're going to be taking a look at Cardano on the daily and weekly timeframes and give you my thoughts and opinions as to kind of where things currently sit and what I think is likely to happen next. There's a few different things going on here for Cardano, and it can be a little bit confusing at times. So let's jump right down into this one, right? So here we have smart money concepts, and we'll probably start here, and we'll also take a look at a little bit of the Elliott wave and some of the weekly stuff where future projections and all that kind of good stuff. So let's take a look at the current positioning here on our smart money concepts on the daily paired up with USDT. We are using Binance as our data source. You can see up here we have something called a weak high, and down here it's a little harder to see. We have something called a strong low. This is an indication that there is a probability of a move to the upside according to smart money concepts. I kind of disagree with this to a point, because we have this change of character here. It's kind of saying that we have a weak high because we're in a bullish state of play on the daily chart here. However, if we actually just take this down just a fraction, coming down to the 4-hourly chart, for example, wait for that to load up, you can actually see that we're in a bearish state of play on the 4-hour chart. Okay, and so we're waiting for the daily to catch up with what's going on the micro levels, and because of this, we actually have ourselves a strong high, weak low, so unlikely to push up higher, right? So it's important that we reflect on not just, focusing in on one time frame here, but also understand the balancing between these different time frames and what they might mean. So what else do we see on our daily chart outside of the strong highs, weak highs and strong lows, which I actually think are the other way around? We need to acknowledge there's a lot of red up here. Okay, these are internal sell order blocks, and down here we have a lot of green. This is essentially a lot of buy order blocks on the internal side. And this is basically meaning that we're getting ourselves stuck into a ranging market just here. Okay, basically the bulls and the bears are fighting it out. Eventually one of these is going to overpower the other. At the moment we're below equilibrium. Okay, we're below 50 EMA and we're below the 200 EMA. This gives the bulls a little bit more work to kind of do. Okay, they're not at any of these key levels just yet. So the bull sits with the bulls right now. That's a bad sentence. But essentially the bears have control. Okay, the bears are under control here whilst that price is below equilibrium, below 50 EMA and below 200 EMA. Now you can see that the 200 EMA on this chart has been historically keeping and suppressing the price of ADA down. We saw the breakout here, but we've been failing to kind of keep it above this range. Okay, we can also kind of look at this area just here as potential head and shoulders that played out, and we broke the neckline. Okay, so now we have this neckline right here around equilibrium that's being tested. If we can't break that neckline, then essentially, yeah, we're going to have to look further to the downside, basically just adding fuel to the fire as the bears continue to have control and bulls fail to kind of get a grip on what is going on. At the moment, it looks like we haven't got terribly too much more to the downside. It does look like we've kind of hit these areas that we kind of have been talking about for a while, but we can come down just a fraction further if we needed to. We're not yet fully oversold on our daily time frame here on the stochastic RSI, but I will note, and it's probably well worth noting, that this stochastic RSI is on standard settings. What I mean by that is it's on a stock length of 14, it's RSI length of 14, and the RSI source is on closed position. If I just move this over to the side here, keep an eye on these lines here. If I move this to the OHLC4 setting, you'll notice that we are nowhere near the oversold in comparison, right? And so OHLC4 is my preferred option for a stochastic RSI. And the reason for this is it uses the average position of a candle rather than the closed position of a candle. If you just take the closed positions, you're going to get one reading. If you take the open, you'll get get another reading. And if you take the OHLC4 setting, you're going to get the average of a candle. And I much prefer the average positioning of a candle than I do the closed position of a candle. That's why I have this stochastic set to close and this one set to OHLC4. This way I can look at both the standard out of the box kind of stochastic RSI versus my modified OHLC4 average positioning RSI source, and then I can say, okay, we actually probably have some time to be spent down in the oversold area on this chart here, and we've still got progression to the downside on this one, for example. Okay, so using the two can be really useful. Just note that when you just add a stochastic RSI to your chart or an RSI to your chart, it is going to be defaulting to the closed position of a candle. And you may wish to change that to OHLC4 if you much prefer, like me, to see the average position of a candle, the average price of a candle. So, knowing that we are almost into the oversold area, but not yet there, we can expect a slightly further price pressure to the downside, in my opinion. Okay, not a necessity, but something to want to be worth noting. Now, when we take a look down here, we have these two yellow boxes. These two yellow box areas down here, these are not just random. They are created from imbalances in the order books over here. Now, 𝗕𝗘𝗪𝗔𝗥𝗘 smart money concepts is great. It's fantastic. But it doesn't necessarily always show you the fair value gaps. And these are two fair value gaps that were left behind on ADA's chart. So I drew them in myself. I'm not sure why it does this from time to time, but it doesn't always pick up on every single institutional candle. Yeah, and it kind of just leaves them off. It's weird. I don't know why, but it does it. So I have to make sure that I go through and I see if I see them, I draw them on, so we know that they are. What does this mean? Well, it means that over here on the price chart, someone put a large order in here at 28 cents, but there wasn't enough selling pressure in this range to facilitate the purchases. So therefore, the price has to go up to find where the sellers are in order to sell ADA to the person who wants to buy. And so the gap gets left behind with this candle just here. Okay, this candle basically shows us with a large order coming in, the imbalance in the order books, and where the order was finally kind of filled, okay, or cancelled. Okay, and that means that this gap was left behind. This gap is called a fair value gap, and price likes to gravitate down towards these. Okay, it likes to come back in, and it likes to put liquidity where there wasn't any. Okay, so there's a couple that were left behind. There are a few here that were kind of captured out pretty quickly, and some that just have been left behind. So chances are that we're going to have to kind of come back down and fill these gaps. Now, it's not a necessity, it doesn't have to happen, but typically price likes to come down and fill out those fair value gaps. Okay. Now, this first one comes in at 28.06 to 29.55, and then lower than that, we have the 25.55 to 26.33. Now, as I said, that's not a necessity that they get filled out, just something that I would expect to kind of see over time. Now, it can take years to get those gaps filled out. In the case of Bitcoin's $20,000 gap that was left behind in, well, I think it was 2020 or 2021, might have been 2021, and it took until 2022 before it would actually get filled out. Right? So it takes quite a bit of time to play them out sometimes. So on this daily chart, we can see that they're here. It's just an idea that we will eventually come down to these ranges, just not expecting that to happen right away. Let's move over into our Elliott Wave theory side of things. Right? So smart money concept shows us with some interesting kind of things. Now, in Elliott Wave theory, it's both technically possible that there's still a push to the upside, as well as technically being possible that was still a push to the downside. Okay, and so what we've got, find ourselves trapped in between two key areas at the moment. Okay, 29.76 and 46.17. Now, I think there's a low probability of breaking the 46.17 at this point in time, but it can't rule it out completely. And one of the things that can go on here, and as you can kind of see, the expectation is to come down just a fraction lower to 32 to 34 cents, and that will be our C wave expectation there. So you can see we're just looking to try to move that down into that little range there. But on this higher range, we could argue that we have a three-wave structure still got to push us up towards 50 cents, 52 cents maybe, something to this effect. That's still technically possible. And so what we need to do is we need to see what happens once we hit this kind of 32, 34 cent range, whether or not our structure starts to map out like a five-wave count, well, in which case, we'll be looking at breaking up above 46.17. And if that's the case, then we could be looking for finishing off that C wave. It doesn't terribly look like there's a huge amount more though, and we have pulled back quite a bit already. Okay, so we've kind of pulled back down 24.52% so far, and yeah, we're going to see a pretty decent surge on ADA, maybe to the upside here. You know, we'll talk about like a 50% bump or something to that effect. But on a bigger macro piece here on this daily chart, it's just literally finishing off a C wave, and there isn't terribly too much more after that. And one of the things that we have to kind of consider here is that if this is a move to the upside that corrects our monthly, our weekly stochastic RSIs up into those overbought ranges, then I'm going to be thinking about that Z wave structure taking us down into maybe potentially fresh lows. Now, I don't want to say that's a guarantee because it's not. There's lots of different ways this can unfold. I'm still looking at 25 to 27 cent as a nice area for retracement. It could actually be deeper than that by the time we actually get to the point where we see that move to the downside. So all eyes are on the next structure, okay? Specifically from an Elliott wave theory point of view, because at the moment it's both technically possible to go in both directions, which obviously won't happen. What we need to do here is we need to get an anchor in on what formation of candles are going to show us the most probable outcome next on Cardano's ADA. So at the moment, I kind of consider this just, consolidation, ranging in between 29 and 46 cent. And we need to see what happens here at 32 to 34 cent to see whether or not we're going to get that break above 46. And if it's not a strong move, then we'll be looking for a breakdown lower than 29. At the moment, too soon to really give us the indication as to kind of what is going on. Personally, I think we will have a breakdown after a bit of a move upwards. I don't think we'll break 46. We might go and break 40, something to that effect. But I think it will be short-lived and we'll have a push to the downside. I could be wrong on that because we haven't got anything to confirm it. So we'll see how time progresses and where that actually ends up landing overall. But for now, it does appear that we have slightly further to the downside to go. We can see that on the daily chart here with a need to do the move to the downside. On a weekly time frame, we are progressing quite nicely, but we're not yet in the oversold area. If we take a look at this on our weekly time frame, on a closed position, I'm pretty certain this is a closed position. Yeah, closed position. You can see it's almost there, but not quite oversold. And therefore we look for consolidation over and around this range. I have got this marked out at 19 cent on the low side, so a new fresh lower low for Cardano's ADA. It's just an estimate, just a little bit lower if we needed to. But for the most part, we can see that we'll be tracking out an ABC structure, a 5-3-5 structure, meaning that at some point we need to see a 5-wave move taking us up higher. Now, this is splits opinions because people have different views on the market. People really do believe in market cap and don't really fully understand that market cap is only derived from price, and therefore price is more important than market cap. But essentially here we can see a 1-to-1 ratio going to $34 ADA. And yes, I know what the market cap would be before anyone kind of wants to throw that in the comments. But the market cap is basically just price multiplied by circulating supply. Really, it's more important to focus on what moves the price, which is supply and the demand. And so if we do see everything going on from a fundamental point of view that I've been talking about for a little while now, we can see things scaling out quite nicely for Cardano. There's going to be an increase in demand and an increase or decrease in the circulating supply that's available for purchase just through total value locked and things like that. I think $34 is actually very achievable despite what the market cap will be. I think the market cap's just smoke and mirrors. You need to kind of park that idea of market cap being a barrier. It really is not a barrier. It's not real money. It's not liquidity. It is literally just a simple calculation giving you an idea that something is valuable when it actually might not be the case at all. So more important to look at what moves the price, okay, because that's going to be supply and demand. What is going to create a shrinkage of the supply and what is going to increase the demand to such a point where the price will move very, very rapidly. And I think Cardano is actually pretty well positioned to see a very significant surge to the upside. Now, $34 is very high in terms of price action. It's going to be very difficult to push it that high, in my opinion. That being said, there are some key areas on this chart that's worth noting. For example, $4.77 is the 618 area of the fib scale. Very interesting level. We have the 702 at $7.36. The 786, which is another key area, is at $14. And I think these are areas that we should kind of be thinking a little bit more about, potentially as areas of major interest, because each of these are going to be acting as resistance on the journey to the upside. So if price does actually move up towards $34, it would have to have pushed past a lot of resistance at the 0.618 and 0.786 areas on the chart. My point here is I'm expecting new all-time highs within the structure here. So $3.10 was the previous all-time high according to Binance data here, and I expect us to go significantly higher than that. I would be surprised if we do not breach into the $7 to $10 range reasonably quickly and pretty comfortably, considering everything that is building on the Cardano ecosystem. Last check, there was about 1,200 dApps building. Total value lock is growing. The amount of circulating supply of ADA that's actually available for purchase is shrinking. I think there's a significant setup here that's going to see very significant growth over a long time period for Cardano's ADA. So when I see prices down at 35 cents, I think, yeah, this is a pretty nice place to kind of be consolidating here, dollar cost averaging in and around this range. Yes, I expect further downside, but essentially it's all further opportunity for massive movements in price action to the upside overall. So overall, I'm pretty happy to see the progression here for Cardano. I think there's a long-term future, and I think everything that's being built out is quite fantastic. Let me know what your thoughts are in the comments down below. Do you think that we are going to be seeing new lower lows on Cardano's ADA, or do you think actually we're just going to consolidate and then we're going to start getting that structured move to the upside that we're waiting for? Let me know in the comments down below. I'm going to leave the video right there. If you found this useful and informative, smash the like button. If you're new, subscribe. Don't forget to join us down in Discord, and guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to risk your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.